Now that you know what a stock is and how we make money with them, let's learn how to buy them. To do this, you're going to have to learn about brokerage firms. Now, this is going to be some good general info to have, but also you're going to learn some things that a lot of people that are heavily involved in the finance industry, they don't even know this. So stay tuned, you're going to learn a lot. Let's get going. So in order to buy a stock, you have to go through a brokerage firm. Now, what is a brokerage firm? Well, in order to understand what a brokerage firm is, you have to understand what we're buying stocks from. A brokerage firm is essentially a middleman. So when you buy a stock, you're buying it on the secondary market. That means the buyer goes through a broker who links him to the seller. You're not buying it from the company itself. For example, if I'm buying a Microsoft stock, I don't buy it from Microsoft. I'm buying it from someone else who's selling that same Microsoft stock. And a broker just links these two parties together, the buyer to the seller. That's it. That's all they do. But they get paid a lot of money to do this. Now, in the old days, brokers used to offer commissions for their services. That is, you pay them $3 to $20, it really depends on the broker, per trade, just to make that trade. Now, in the era where there's a lot more people trading, you see a lot of commission-free brokers. This is the people like Robinhood. They don't charge these single payment commissions per trade. However, this is where a lot of people mess up. They're not actually completely free. You see, there's something called a spread. The buyer makes a bid on a stock price. That's a price they're willing to pay. The seller has an ask price. That's the lowest price they're willing to sell it for. So the spread is the bid minus the ask price. Now what the broker does is they split the difference. They cut it right down the middle and they keep money on either side. So no matter if you're buying a stock or you're selling a stock, that broker is making money. And a lot of people don't realize this. Even with commission-free trading, your broker's getting rich. This is finance. They need to make their money and they're going to do it. So why does this matter to you? Well, it's very simple. We're trying to make as much money as we can, and we don't want to give it away to these Wall Street brokers. So what do we have to do? We have to minimize the number of trades that we go into. That way we minimize the brokerage firms. So now you understand how a brokerage firm works and what buying and selling a stock looks like, and you understand spreads, which is something not a lot of people understand. You're way ahead of the game already. On this next video, I'm going to tell you what some of the most popular brokerages are today and my personal favorite. So stay tuned and see you next time.